one of the things I like to talk about, thankfully you guys are eating, so that's a good start. You're happy, right? Hopefully I won't bore you too much with some tax issues here. Do I have any CPAs? No? Good, I can say whatever I want. So, what we look at here is, I don't know if everybody understands, in retirement, you sometimes volunteer to pay taxes to the government. And so, this was interesting to me when I started looking at how taxes work, what we pay into the system, and how we can actually kind of manipulate it ourselves. I've written a couple articles for Aspire magazine on this topic, so I don't know if you read that magazine or not, but I want to kind of talk through this, just give some general education. Always have to show the disclosure that I'm not giving tax, investment, or legal advice to you, more of just education, but I'm pretty casual, so if you have questions with this, feel free to jump in. Randolph said I have as much time as I want, so watch out. So, how does paying $0 in taxes sound to you guys in the future? This is where, when I first saw this statement, I was like, this can't be true, right? That means you don't bring in any income. That's how you pay zero taxes, is you don't bring in any income. But when you start actually understanding how the different income streams that you receive all get taxed differently, and that you can actually manipulate and control in ways how you're going to pay these taxes in the future in retirement, I think it's a really cool story. And so I want to give you kind of the general, and then I know working with Randolph, myself, we can help on an individual level as well with kind of looking at your specific situation. So if we just start off with the federal marginal tax rate, a lot of people will tell you what tax bracket they're in, right? I'm in the 35% tax bracket, or I'm in the 20% tax bracket. And a lot of people might think that means I actually give up 20% or 35% of my income. We actually are on a graduated tax system. So the more income you make, the higher your tax rate is on those last dollars of income. So everybody that makes $11,900, if they're single, they are going to be in this 10% tax rate. Once you make over that amount up to 48, and I'm looking at 2025 numbers, you now have 12% tax on the excess. So this is a graduated system. Progressively, it gets higher as you make more. The other part I think is interesting about this is in 2017, we saw a reduction in our tax rates and an increase in the bracket, in the amount of income you could bring in. So what was nice about this, you used to always hear about the marriage penalty. I don't know if you guys remember that. When we had the changes in 2017, you'll kind of notice here that pretty much all the way down to the higher income levels, you're going to now see it just being doubled. So there isn't going to be that same marriage penalty that was around. Here you can see all the way to the 32% bracket, you're seeing it doubled. If you made $250 as a single, or you make $500 as a married couple, you're in this bracket. So that was nice. We reduced that penalty. The other part of this that was nice, I don't know if you guys remember, in 2016, we were at a 39.6% as our max for our tax rate. Here you can see we have 37% as being the maximum. And in 2025, did you guys hear about the one big beautiful bill that was passed, right? So that actually made these tax rates and these brackets permanent. Now, when I say permanent, what does that mean for Washington, D.C.? Right? Maybe while we have Trump as a president, maybe just as long as if we keep Congress to the more conservative side right now. So for right now, what was nice for a lot of people who started worrying about the sunset of these brackets, we do have these probably for a couple more years. The thing that comes to mind for me is we don't know what's going to happen to taxes, right? So could we, as individuals, start taking more control and trying to make sure we understand that some of our assets in our portfolio are going to produce tax-free income for us. Something that doesn't make us worry about what these tax rates are. And, you know, I see all of you, you're all younger than I am out there. We were all taught to put money aside and put it into what? Pre-tax retirement accounts, right? Don't pay tax on it now, pay tax on it later when you retire, because you'll be in a lower tax bracket. And my mom is 87. I talked to her about this when I started learning more, and I said, have you and Dad, my dad recently passed, but were you guys ever in a lower tax bracket when you retired? And my mom said, no, never. It just kept, you know, so this idea, it wasn't as though it was wrong, but we're kind of learning we need to diversify our portfolios more. We need to make sure maybe some of our contributions we should put into a tax-free type bucket, try to save. But would it be smarter for us right now to pay taxes at these lower rates and know that in the future, we have set aside, we've had this compounded interest, this growth. Would it be better for us to know that we're just gonna get that money out tax-free and not worry anymore?